Thoughts on the session today?
James, look, a bit of a disappointing one, as Mike has mentioned. Really seeing caution, I think, from investors following the gains that we actually did see on the market last week. We were up about 0.6%, but unfortunately we've now wiped out all of that just in today's session, but really continuing to see those oil prices under pressure. Of course, last week we saw the 7th consecutive week of declines in those oil prices. West Texas oil was off on Friday, and as a result, really continuing to see pressure there. And of course, in that materials sector, financials were also under pressure after we saw that weaker than expected housing finance data coming through at about 11:30, and of course that certainly put pressure on some of those financial stocks. But as Mike has mentioned, volumes were extremely light today, so I'm not actually too sure whether we can read into some of these falls we've seen today, but certainly expecting that for the week ahead those volumes will continue to remain very light and potentially continue to remain light in terms of corporate news as well.
Your own view on the banks?
James, look, I certainly think the banks still have some way to go, and certainly we do remain optimistic. We would have actually seen today we had an upgrade coming through from Bell Potter on CBA, in fact, so that actually remains our top pick within the banking sector. If we look at that upgrade that's coming through, expecting that those estimates for the first half result will in fact be very strong. We know that's released on around the 11th of February, and expecting that the momentum that we saw coming through from the first quarter will actually continue coming into the second quarter. So Bell Potter's actually increased their earnings forecast by about 1%, which has led to an increase in the forecast for those dividends by about 1%. So that valuation's been increased, and also that target price increase. So certainly expecting that they have a pretty strong cash flow generating capacity, but also in terms of their capital generating capacity, that actually remains very strong as well, expecting that common equity tier 1 ratio will increase from about 8.6% to about 9.2%. So certainly in a very strong capital position should any of those recommendations from that financial inquiry report actually come to fruition. So certainly remain very optimistic, particularly in terms of CBA, and NAB is also another one that we actually remain optimistic on, but certainly in terms of the banks, particularly as these interest rates do remain low, particularly like them in terms of their high dividend yield potential as well.
Fairfax, in taking 100% control of something that it had less than 100% control of until earlier.
James, that's exactly right. We did see Fairfax closing up about 1.2%, and in the end, as you say, taking full control of Metro Media over in Victoria. They already owned that 50%, now taking control of the remaining 50%, and obviously it is part of their efforts now to continue expanding their real estate business, their online real estate business Domain, and obviously that's in response to competing with, say, the likes of realestate.com as well. So certainly an indication that they are trying to offset a lot of the declines that we have been seeing in print media, which has affected, say, the stocks likes of Fairfax, by sort of looking at some of their cost efficiencies and also looking at growing that digital base of theirs as well. So clearly identified some of the structural challenges that are happening in the media industry at the moment, and obviously responding to that, and this news today really an indication of that. If we look at the price that they've paid for the remaining 50%, $72 million, obviously that is a mix of shares and cash. That actually is obviously being able to be funded quite sufficiently by the company. We know back in the 22nd of December, they actually sold off that Perth-based news station of theirs, their radio station, and also they combined the remaining radio stations with Macquarie Radio Network. So the two transactions combined actually gave them about $96 million in cash. So clearly a sign that they are in a very strong financial position to take on this remaining 50% stake. So I certainly don't think there was any concern there from investors today, and overall I think it is certainly quite positive, particularly in terms of that growing their online real estate business and obviously offsetting some of the declines that we have been seeing in print media.